First, let's go over to the services tab right here on TFNN. Well, actually, first, before we even do that, we're going to go type in something in the URL. That thing that we're going to type in is ord-oracle.com. Now, this is Tim Ord's website. Tim Ord comes on every Tuesday and Thursday. He's a fantastic contributor to TFNN and the Tom O'Brien Show. If you check out his website, which you really should, this is ord-oracle.com. You go to get to home, kind of explain what he's been doing. Go to the newsletters tab, go to the book tab. Fantastic, you can contact him there. Additionally, if you go over to the services tab at TFNN.com, you can find 2 fantastic webinars from Tim. That is the secret science of market tops, and then 6 secret ratios every trader should know. The way I would probably start off with that is, especially if you're just getting into trading, definitely check out the 6 secret ratios every trader should know first. That kind of gives you a little bit of bearing when you're looking at things yourself, and especially when you're listening to Tim's analysis. And then additionally, the secret science of market tops. We hear Tim talk about, I don't know if this is necessarily a top right now, or I don't think this is a top rather. I don't think this is a bottom. And listening to this kind of gives you some insight into why he says that, and it helps him kind of position out forward. So Tim, it is fantastic to have you. How you doing?
Good. Glad to be back on here. So
absolutely.
Got a lot kind of things going on. It's a little bit of goofy market. We'll start off with the big picture and kind of narrow it down to the smaller picture.
Sure.
But chart 1, we showed this last time we were on, and this kind of looks at the bigger picture. The bottom window is the 21-day average of the ARMS index, and the next higher window is the 63-day of the ARMS index. And normally readings above 1.2 on a daily basis, that shows panic in the market. The more days you have panic in the market, the more bullish that becomes. But right now, we got a 21 day below 1, or actually below 0.95. That's where the bearish the bearish signal, I guess, starts.
I see.
And on the 6-3 day, we're down. Anything below 1 is bearish. We're at 0.98. And I shaded in pink the times when the 6-3 day trend was below 1.0, and all those times came at major highs or significant highs, and we've been actually below 0.1 going back. It's probably started in maybe November there, even though the market rallied up a little bit. This indicator is designed to catch the bigger trend. It doesn't catch any of these minor swings. So this is updated today. It's still in current readings 0.98. So we're still in bearish territory. We don't have enough panic in the market to create energy for it to go up. So intermediate term, we think this year is going to be kind of a rough year. How big of a decline, don't know. Could just go sideways, but uptrend or making progress from here to the upside at best is minimal. I will put it that way.
I see.
We take a chart on 2, kind of looks at the chart 2 looks at the little bit shorter term time frame as far as the ARMS is concerned. The bottom window is a 3-day trend. The next window up is a 5-day trend. The one above that's a 10-day trend. So these type of indicators are designed to look at the more short-term pictures. That rallies may last a week or 2 or 3. The shaded pink areas are times when all 3 of those indicators were in bullish territory. And if you notice, last time we were in bullish territory was a 3-day and a 5-day, and that came back in early December and picked out probably that November low where the market rallied into the high. And right now, we're not anywhere near the 3-day, the 5-day, or the 10-day trend, anywhere near bullish levels. So I'm kind of, I traded once this year so far, made 1.59%, not a huge gain, but considering what the market's doing, that's decent.
Yes.
So I'm kind of being real careful here. So let's kind of look at the real short term, see what's going on. This is a chart going back to October, but what I kind of I shaded in blue or light blue there, where the trend readings kind of all came in together. And I did this chart earlier today, and the trend right now is 1.29, so still close to 1.32 when I did it earlier today. But if you notice, all those trend readings come in near the current price range. We're kind of, and so the market made, this is option expiration week. And also yesterday, I think it was yesterday or day before, was a full moon. And actually full moons do have an effect on the market. Matter of fact, there's some statistics suggest full moons can predict turns in the market 60% of the time. So it's actually more than 50%. So I keep track of it, but I wait a lot more in the trend readings because you got to have panic at a low. And we got, even though the 3, the 5, and 10-day trends don't show any panic because there's not enough panic in those days close enough to form a low, but we do have panic in a price range here. It looks like about 582 range, and we're kind of in that range right now. And so there's a little bit of panic around this range. So it's option expiration week, which normally leans bullish. Can we give a bounce here? I thought we may go back up to the previous highs again. Looks like about 597 possibly, which was the previous highs. And I'm debating right now to take that trade or not take that trade. So I'm kind of watching here. So I don't know. It's not the best trade in the world. And the more panic you have, the more stronger that trade becomes. And right now, actually the best thing for me, for the market to do is actually go down here into the close. If we do that, I notice every time the market pulled back today, the trend went up. We went up, I think, close to 1.7. So if we end up with the market manages to go down today into the close and the trend goes up to 1.7 and we get 300 down tick readings, I'm long on tonight's close. Anything short of that, I'll probably wait. So I hear the music.
Yes,
so.
Fantastic. Tim, please stay right there, folks. We'll be right back with Tim Ord after this break. Welcome back, everybody. This is Jacob Shoup. You're watching The Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle. Okay.
All right, let's move on to let's look at the gold market.
Perfect.
There's a bunch of stuff going on in the gold market. Chart number 4. This is inflation-deflation ratio on a daily basis. The top window is the RSI for that ratio. We got an RSI bullish reading back in end of December, 1st of January. That's a 1 buy signal. We got another one here today and actually Friday. This is chart number 5. Actually, I even got a couple of different other buy signals, but the second window down from the top is a bullish percent index for the gold miners index / GDX. So it's another ratio. I did an RSI on it. So when this RSI gets below 25, it's 23.41 on yesterday's close. It's a buy signal. This is usually a multi-month buy signal on this indicator, but we're in a buy signal on this indicator. I even can show you another one here. If you go to chart 6, this is a bigger, longer term buy signal, which is the bottom window is the GDX GLD ratio. If it gets down below 1.45, which it did last week, it's usually a oversold condition. And we're actually, if you look at the GDX portion of the chart, which is the second window down from the top, it's the weekly GDX, it did pretty much find support at the previous highs. So there's a lot of different stuff on GDX, the gold stocks. I didn't look at the gold, but I kind of specialize in the gold stocks.
Right.
There's a bunch of different buy signals on the weeklies, and actually the monthly charts are also on a buy signal. That was back from, I think it was March or May of last year, and they remain on buy signals. So the short-term pictures turned bullish here, and how high is high, I think we'll probably bust through the previous highs up around that 43, 44 range, what it looks like, because some of these indicators that I just showed you are at least multi-week, if not multi-month. So I don't think the market's just going to go back up to the previous highs and stop. I think we'll probably bust through, and we're probably going to take a shot at the old highs of 2011 up around 57, 60 area is where I think we're going to go. And if you go down to chart 7. I know I'm going kind of fast here.
No.
But this is a momentum chart. The bottom window is the 18-day average of the up-down volume, and next window higher is the 18-day average of the advanced decline. And as long as those two indicators stay above -10, the uptrend's intact. And we actually just popped above. This is a little bit of a lagging indicator, not much, but it lags just a little bit. But it just popped above -10 on both of them yesterday, even though the market was, GDX, I think, was down 2% or something yesterday. But both those indicators popped above -10. So now you got momentum on a short-term basis behind us. So the rallies probably started, first part of January. So I think this probably is going to remain in the blue, at least, probably March or later, maybe until next September. I don't know. But there's a lot of things that gave buy signal. I didn't trade out of the market back at that high in late October.
Right.
Because if you look at the bigger term, there'll be consolidations along the way, but a lot of times they'll play rotation in the market where the past leaders will take a rest, and probably what I'm thinking is going to happen going forward here. A lot of these small stocks are starting to give buy signals on the monthly charts, and I think those are going to start running. And a lot of those will probably be 10-to-1 to the upsides over the next 12 months. I don't know which ones they are. You'll have to wait and see. But I think this year is going to be a bear market for the equity market, but it's still going to be a bull market for the gold market and silver market. It's what it's starting to look like. So money's got to go somewhere.
Yes.
It looks like the money's, at least quite a bit of it, will end up in the gold market, either the precious metal itself, if not the equity part of the gold market. So that's what it looks like now, because there's a bunch of different types of buy signals of all different type of, and because I don't use one method, I use several different methods, and usually when I go into a trade, I got at least two different methods giving buy signals. And that's what's happening here in the gold market, equity market. So can both of them fail? Unlikely. One can, but the ones I use are usually 80% chance of success. So if you get two of them, there are at least 80% chance of success. Your odds go way up. So
sure.
Should be a good year. So.
Yeah, and I mean, it really would be nice to see kind of a sector rotation like that. I mean, they're obviously not going into equities, right? Coming out of equities right now, cash is, obviously you have yields going up in the bonds, people kind of selling out of those. And I mean, seeing a transition into the metals would be, I mean, of course, you had a great year last year, right, for gold. It was sleeping a little bit,
yep.
And so seeing this kind of rally up, especially with the gold miners kind of catching up to spot prices of gold, especially holding at kind of these levels, it would be nice to see. Definitely. Yeah. There are some that I have, more penny gold miners, right, that I think have a good runway for production, right? They're out of exploration into production now. Those are ones I'm definitely following quite a bit. So,
yeah, you might do a weekly or a monthly Bollinger Band on it, and when that equity gets above the mid Bollinger Band, especially on a monthly chart, usually that's the beginning of a run that's usually has legs to it. I'll put it that way.
I hear that.
So momentum is really key in the market. So
okay.
But a lot of momentum on these little ones are starting to turn up. So it could be a banner year. But once it gets too good, it's usually I'll have indicators for that too. So, but we're even not near that stage yet. So, but it may be coming. So.
Well, when it happens, if it does happen, we're looking forward to having you back. Of course, we'll see you Thursday as well, Tim. Thank you so much for coming on the show.
All right, we'll talk to you then. Thanks.
Sounds good, Tim. Folks, stay right there. We'll be right back for a short segment right after this.